Okay, so next up we have Mr. Markus Thielen, Chief Investment Officer of IDEG.
And the next panelist, Derek Lim, Head of Research at Spartan Labs.
Next up, we have Ms. Tuhina Singh, CEO and co-founder of ProPine.
Alright guys, let's give them a round of applause and let's learn, and of course,
We have another panelist. We have Mr. Stefano, partner at DWF Labs.
let's give them a round of applause.
All right, morning everyone. How's it going? Come on guys, how's it going? Thank you for the encouragement. So we have a fantastic panel today and we're going to talk about how to invest in the future of Web3. So before I get started, maybe I'll ask the panelists to introduce themselves, the services they provide, and specifically how they differentiate themselves from their competitors. So we have only 2 mics, so I'll be holding my mic. Maybe the others will have to pass it around, right? So we could start with here. We could start with Adrian. Yeah. So Adrian, you start.
Hi everyone. Hope you're having a good conference so far. Adrian from Binance in the corporate development division. Primarily, I look at token listings and also other Web2 to Web3 initiatives, trying to bring more users, the next billion users, to Web3.
Hi everyone, I'm Markus. I work for IDEG, so we run 15 crypto funds, everything from quant ARB to multi-token strategies. We also have a sister company that is quite active in crypto venture capital. We have around 300 investments. We just led the Binance US round, early investor in Binance, the mother company. We also have a mining business that is in 6 countries, around 3 to 4% of the global mining hash rate, and that's mostly in the US.
Hi everyone, I'm Tuhina, co-founder and CEO of ProPine. We are a licensed custodian based in Singapore, licensed by MAS here. And the niche for ProPine is that we provide a solution called Protect, which is an integrated custody solution. And when I say integrated, it basically means we can manage crypto, fiat, and digital securities all from the same platform. And on top of this platform, we've got a bunch of solutions built out, and we're creating a product called Definity, which is actually going to be launched 2 weeks from now. And Definity is what we call a regulated window into the DeFi ecosystem, whereby we make institutions, we give a platform to institutions to be able to access DeFi with a full governance, with a full risk framework in place. Thank you.
Hey guys, I'm Derek and I head the research unit at Spartan Labs. So we are a Web3 venture studio under the larger Spartan group, and I'm really excited to be here. I didn't expect such a huge turnout in the morning, so really glad to get this rolling. So yeah.
Hi, I'm Stefano Virgilli, Italian, as you can tell from the gel in my hair, the beard, the accent. The Singapore PR, I've been around for 15 years in Singapore. I've been around in the crypto industry for about 6 years. I work for DWF Labs. We are a crypto VC, mostly focused on Web3, GameFi, Metaverse. We're also doing quite a bit of trading and market making. Perhaps later I'll share some more information about. Thank you for coming.
All right, thank you everyone. And myself, I'm Kishore, owner and CEO for crowdfund Junction. We are a DAO VC, and we're going to be sharing about how Web3 can be a space for everyone to invest in, and we could also learn about some of the regulatory aspects as well. So my first question to the panelists, maybe I'll direct this to Tuhina. Tuhina, your company ProPine has been funded by some of the top VCs, so congratulations for that. Can you help the audience understand, first of all, what is Web3 from your point of view? How is it different from maybe Web1, Web2? And what advice would you give Web3 founders who are trying to get their first check?
With that, am I even the right person to talk about this? I think the last part you should definitely, I think we have many more esteemed guests here who will be able to answer that way better than me. On our side, I think what is Web3 is a very difficult question to answer. I think everybody's still trying to figure out what it means. But whatever form that we're seeing it today is such a nascent form. The way I look at Web3 is that it is the future of all of us. And when I imagine that future, Web3 touches every aspect of our lives in a very integrated fashion. So you won't have like a physical storefront or like, your different identities in these different worlds. I think that the physical and the virtual worlds are going to, those lines are going to blur in ways that we can't even imagine. And we're going to have these really integrated lives. Imagine having multiple avatars of yourself in different parts of the world. I mean, it's going to be quite crazy about what we think about Web 3.0. But one of the major aspects is going to be democratization of power, of all kinds of power, not just financial power, but whether it is reflected in data. I think that power is going to get disintermediated and it's going to come closer to the consumers and to people to whom it should really belong, rather than being centralized in the way we see Tech 2.0, these large behemoths that really control large parts of our life. So for me, Web 3.0 means democratization of that power and enabling all of us to have better control over our lives, to have better control over monetization, and better control over our privacy.
And the second important question is, you're so successful in raising funds for your own company. Maybe the audience would like to hear how can they get their first check from a VC? And then of course I'll ask the VCs as well.
How did we get our first check? We got our first check at a time when Bitcoin was tanking, and in Asian VC circles literally said Bitcoin equal to scam, Bitcoin equal to ICO, utility tokens. And honestly, at that point of time, I don't think Asian VC ecosystem was that well developed as it is today. There were some really smart VCs, and some of them ended up backing us, and I'm really grateful for them being able to see what we were building out. I think the most important thing as an entrepreneur is not to take what VCs say as as something that you can take, like just believe in yourself. There are a lot of names who at that point of time told us what we were building was just not possible for a startup. They never thought that a startup like us could get an important and a first of its kind license from MAS. They told us, custody is something that only banks will build. And I, having come from a banking background, I knew that, I understand what are those problems. So, and there were some really good people saying, if you were building some other business, I would have loved to back you, but I'm sorry, but I don't think there's a future for this business. I think so that conviction that you have inside of yourself is the most important thing. And remember, you only have to get one check. That's it. There's one person who needs to believe in you. And you should be mentally prepared. If you're going to go out there, you're going to talk to 100 people, 99 are going to reject you. And it doesn't matter. The only thing that matters is that one check. So being able to keep yourself up in the face of no's that one thing is your belief in your idea and why you're doing it. Why you're doing it. Even if you don't know how you're going to do it, and that's fine. You just need to know those first 2-3 steps. Conviction in your idea is the most important thing. And don't let no's get you down.
Beautiful, that's a beautiful takeaway. And that single word is conviction, guys. I would like to ask the VCs also on this panel, maybe quickly share what will make you write your check to a founder who's kind of pitching to you for the very first time.
So in a metaphor that I haven't tried before, but it kind of resonates when she was describing it. It sounds like dating in a sense, like you can date many times but then decide to actually close the deal with one. For us, we receive a lot of matching, like about 100 projects that we go through every month. And last month, actually this month, July, we invested in 6 projects out of probably 100 that approached us. For us specifically, we are very interested in tokens. So if your project is about to issue a token, it's a good time to talk to us. And this is counterintuitive, I think, because some founders, they think that because the price of the cryptocurrencies is going down, they think it's more appealing to sell equities. But for us, frankly, it's more interesting to have tokens. Main reason being is because we are very big traders and like really top 5 traders in the world. And so for us, it's very easy to get your project listed in one of the top 40 exchanges. Very easy to market make for you. And so it's a tool for us. The token is a tool to work with. And we will encourage you to approach us if you want to have your token generated.
Thanks. So I think 3 simple points from me, right? Because if not, I can go on for this for hours, right? So I think, firstly, founders who want a successful first check, your PMF is the most important thing, right? You must make sure that what you are doing actually value adds to the space or user base at large. If there's no PMF or is there no real problem, then I think that's an issue, right? Secondly, we have to make sure that you value add above and beyond what is already out there. Because this space is populated by so many projects right now, you have to cut above the noise, right? You must be aware that you have to value add above and beyond all those. And finally, I think this is something that most of you will agree with me. I think fair valuation, right? We must, we all must be aware of the market we are currently in, the conditions. As much as it's hard to DCF and get a fair value to your project, but you must try to pack that as much of a financial model, right? Because I think right now a lot of people are raising way above their fair value in this market. This is just some of my thoughts, and yeah, I think being able to pack a fair value to your own project is quite important. So yeah.
Well, I think the comment earlier about token versus equity is quite interesting, because I don't think it's controversial anymore to really focus on the token instead of the equity. I think the big advantage is, of course, the liquidity. Of course, nobody wants to get out of the project like quickly, but nevertheless, I think it helps. Validation for the project. There's some reflexivity in the whole process. And I think when we have seen like some of the the larger raises over the last few years, BlockFi is unfortunately a good example here. Right? They raised at a $4.5 billion valuation last year. A lot of people like locked up, and people still locked up, and nobody knows if it's like 50 million or 100 million or wherever it is. Versus token, you can see the validation. Token, I think it encourages also the team to keep developing it, right? And I think that's really the key, that as a VC, you want to really see the full commitment, and the full commitment is very often reflected through the market, and it's faster priced in and better reflected, and that's what we prefer that as well.
Very well shared. Adrian?
Sure. Before coming to Binance, I was also a VC, but in the Web2 side. So in fact, I met Thielen in the past as well. Hopefully, I wasn't one of those that can't quite remember now. It's a couple of years back, but I think to get the first check, definitely a lot of persistence and determination. But I think you have to focus on a couple of things, right? And it's quite the same for both Web2 and Web3. There are nuances. Maybe I can share a bit difference there, but largely, the team has to be really strong, passionate, and the right team solving the problem that you're doing, right? And then very committed, and not going to leave the project halfway, because when you leave, the VC is stuck, and it's a very illiquid market. So that's something that very key. We depend on the teams that we invest in to really drive the project forward. That's why team is always key. But other than that, very very similar stuff that you probably know about the market, right? Big, large value pools that are growing very fast. And in Web3, a way to decentralize that market and disrupt it, to have a better model for economic distribution and governance. And then the technology is very important in Web3 as well, because for Web3 projects, you go to test nets before you launch on mainnet. You can't quite afford to fail, because once you come out and it doesn't work, you almost don't have a chance again, and people can lose tons of money, especially right if there's hacks or it drains out, or token pumps and dumps. So there's the technology scalability for large scale adoption, and the scalability in the tech stack, right? And the security as well is very important. So a lot of all these, if you can show it on start. One more point, actually, very, very important. Two more, actually, I have. One is on the business model. It's a strong product market fit, right? And that's seen in the growth of your users, right? If you can show at the start strong user growth or strong community or strong developer growth, right? That's very important to show that there's actually people that would use this and get value out of it rather than a conceptual idea that sounds very great to people. And the last piece in Web3, if you have sound tokenomics, right? I can touch a little bit more on that. I think those are like key points that I would see from both a listing as well as investment perspective. So team, market, technology, tokenomics, and business model.
So, Adrian, I'm going to come back to you on the tokenomics. I'm sure the audience would like to learn that from you. You're an expert in this. But my next question would be to Markus. Markus, you're an expert on data. So could you kindly share from your side, is the winter over or is still going to continue? Because a lot of projects are finding it difficult to fundraise. Is the investing in Web3 slowing down or it's just starting to pick up? Maybe you could share a little bit on this.
I guess no investment advice as a disclaimer. But my own opinion is really that when you look historically, and of course we don't have too much historical data in crypto, but when you look back the last 10, 12 years, we have to, we tend to have a mid-cycle slowdown within the halving periods. And normally within like 18 months before the next halving, you tend to bottom out, and that really happened, the last 2 times during the halving cycle. So we were actually this year quite cautious because we were expecting to slow down. And we did some historical analysis. I mean, we have published a lot of stuff, for our institutional investors. We also write on LinkedIn where people can subscribe. And our view actually has been that we have kind of reached the low. We expected actually that Bitcoin would drop 60% this year, and it actually has done it. And a month ago we turned more constructive because we have reached this minus 60%. I think we are very close to this kind of September low that we expected. I think it's pretty high conviction on my side that the U.S. interest rate hike cycle is a bit over or really priced in now. I think these are all good indicators, and I think that the last indicator that we have been looking at, and this is a little bit the insight that we have from our mining business, is really our mining business is not that old. It's really like the last 3 years only in place, and it's been being built quite aggressively. And I think the interesting aspect here is that that also means not that we don't have any experience, but that means we have the fast machines. So in the fast machines are really economically, even at this Bitcoin price. So even here the profit margin is quite healthy, but overall the industry has around a Bitcoin mining price cost of like 28,000. So when Bitcoin really dropped to like 30,000, I think it was pretty clear that a lot of miners had to sell inventory, and that's why we dropped very quickly to 20,000. And we constructed actually a mining hash rate model that had 11 signals over the last 10 years, and it made money 10 out of those 11 signals. So it's a probability of like 91%. And the signal basically goes when the hash rate goes down for a month and then starts to pick up. So miners turn off the machine, so the hash rate goes down, then miners turn on the machine because it becomes economically again. Then you have like a forward price of something like 60%. I mean, it sounds a little bit crazy, but in crypto it's not crazy, like over the next kind of like 6 months. And we had this in early July, the signal turning green again. So this is a 12 signal versus 10 out of 11 signals have turned positive. So we are actually quite constructive here, and we think the low is in, and we think it's pretty high conviction. So that's all.
Yeah, we'd definitely like to kind of deep dive into that report. Okay.
To send it, but it's on LinkedIn, so you can subscribe and you can connect.
Yeah, go ahead, Toina.
Thank you, Markus. I loved your insights, and I want to talk to you a little bit more about it. But just to add a little more macro perspective to this, I come from a macro background. Used to be a trader in my previous era. So if you look at macroeconomically, at this point of time, for everything said and done, crypto is a high BWA, right? So you have to look at macroeconomics as well. So from that perspective, I think most of the pain has already been built into the markets, which tends to be forward-looking. And you need to be able to delineate between where the markets are going to go versus what pain is left for the street to experience. So yes, there is a high level of recession that's possible. The job market is going to go through a little bit of a further bad patch and everything. But I think markets, being forward-looking, have already priced in a lot of this pain. Markets always bottom on negative news and not positive. And if you look at the last 1 month of price action in global equity markets, global bond markets, you will realize that incremental bad news is being not met with crazy drop downs in prices. And if there is any, you will incrementally see the price turning back up. And that tells you that the excessive bearishness has already been built in. The expectations are there. So overall, personally, I think, given everything else, last quarter is going to be way better than the year we've seen so far. We may still have next few weeks of price drawdowns. I wouldn't personally be surprised if some of the lows we have put in place in June across various asset classes get taken out briefly, and that's fine. But I think we're getting close to that macro bottom across risk asset classes. So we're talking about equities, etc. So, and that when you bring that down back to crypto, I do think we're very close to bottoming out, very similar to your point. But it could, because there could be potentially further bad news. But like I said, it's going to be like short terms. And see, what I'm saying is I'm not here to predict exact bottom, but I know that there is a formation of bottom, and we're getting close to that. So I think it's a good time to build. It's actually a great time to raise. If you raise in this market, you're a pretty strong company, and next 12 to 18 months from now, when we have the bull market, I think it will. These are the players that will be really reaping the rewards.
That's why you want the tokens and not the equity.
Yep.
Right. What about the rest of the panel? Do you all agree we have bottomed out, or we are now moving to moving from bear to bull? Just quick yes, no.
So I'll be quick with this, right? So I don't presume that you would have called it bottom, but just to build on what Markus and you said, right? I really believe in looking at minor revenue and the zero hop ratio. So I'd love to read your report if you can send it over. But just to add on to that, right? Whether it's a winter or bear or when you recover, I think that if you're a founder with a project, I think it doesn't matter, right? I mean, of course, to understand the climate for raising and stuff is important. But at the end of the day, right? One thing I like to do. So don't quote me on this, please, right? It's a personal thing, right? I like to separate certain terminologies, right? I like to separate crypto, Web3, and blockchain, right? Crypto is the business side of things. It's for traders who want to earn a quick profit and earn, basically farm and just earn from this space. Web3 is a culture, is a movement. It's a social cultural thing, right? As lofty as that sounds, right? It is a movement if you think about it, right? Blockchain is a technology, right? So in a price winter, right, the crypto side of things will fall off for sure, right? Commercial side of things. But the Web3 and blockchain side of things, I think you should go full steam ahead. Because if you emerge out of this, if you win the war of attrition, right? If you still stand after this cycle, I think you will be able to experience great things in the next bull cycle. Because I think we all know that will come, right? So yeah, just something I wanted to share.
Yeah, I'm pretty much aligned with your point of view. I tend to define myself as an 80-20 person. Like I never go in one direction only and then being absolute in my point of view. In general, I would say that when you talk about the price of the token or the price of the cryptocurrencies, it's about finance. And finance very rarely is a win-win situation. It's always a win-lose situation, or very often a win-lose situation, 80-20. Whereas the Web3, I located more into the economy side, and the economy is more of a win-win situation in the majority of the cases, where you're building something that lasts, something that provides service. But cryptocurrencies provide no service at all. It's just you buy it because you want to make money. Sometimes goes up, sometimes goes down. And that's where, in the context of this panel, I'm not super interested in the price of the cryptocurrency. It can go up, can go down. We have the same exact panel in 6 months from now. We're going to have a completely different conversation. But on the other side of the equation, where we talk about Web3, the things that we are saying today might be the early seed of what we're going to see in 6 months from now, which is going to be an evolution of what we have discussed today. And so that's the part of the conversation that I'm more interested in. But of course, from a speculation perspective, this point of view on the cryptocurrency is very useful.
Well, you can hold the mic. Adrian, what about you? Your point of view?
Yeah, thanks, Kishore. I can't agree more with what the panel has already said. A lot of good points, Derek and Stefano. I think maybe one more to add from my perspective is to Derek's point, right? Crypto, Web3 and blockchain. Crypto is really price action, which is driven by a lot of market sentiment and macro and stuff. And that's obviously come down because it's a very nascent place, right? There's no liquidity, and when things go bad, then people go in the same direction. But for the other two, where the Web3 revolution, the cultural revolution, and then the blockchain technology, in the recent crisis that you see with 3AC and Celsius and all, right, it's actually shown that a decentralized financial kind of platform actually works, because those that collapse are centralized platforms, right, which you have no transparency behind what they have done and where they have put money. Whereas in the decentralized world, they have all survived and done very well. When you look at Uniswap, PancakeSwap, and all the DEXs, right? So actually, the blockchain technology is useful and it's done well amidst this environment compared to what's a centralized world. And I think I just look forward to a world where Web3 and blockchain can do a lot better for for economic and governance distribution for the masses and the community.
You just answered my next question. Okay, so maybe I'll ask this question to Derek. Derek, on the research side, so out of all the trends within Web3, which is the most that you guys are excited about at Spartan, and why?
Yeah, so I don't presume to speak for the whole of Spartan, but personally and my team, right, we're interested, I think, in 4 sub-verticals mainly now. So first, GameFi, right? I think we saw the rise and fall of GameFi in this past cycle, and I think there are a lot of lessons to be learned. And increasingly, we are seeing the founders of GameFi projects realize something, right? Let's be honest, right? Play to earn was not invented by Web3. It was a very established Web2 concept, right? Even games like CSGO and Dota, those were the OG play to earn. Sorry, right? I have a friend there who actually earned a lot from Dota and trading items in CSGO. So their model is something that increasingly we are realizing that we should learn and adapt from, right? And I think the next wave of GameFi, I'm very, very interested to see how they will come up. Second, I think DeFi, right? So what came to define DeFi in 2020 and subsequently 2021, right, was really this whole concept of bootstrapping liquidity and users and TVL, right? DeFi was defined wholly by that. High APRs, liquidity mining, right? But the problem with that is, once you have bootstrapped these users, right, what's next? Some teams thought of what's next, some teams didn't. But even those who thought of what's next, right, the users were too mercenary for them to proceed to the next stage, right? Now we are seeing a shift away from mercenary bootstrapping and just very short-term GTM strategies, right? We are seeing true revenue generation with GMX, SNX, DYDX, even YFI and Joe, right? They're moving towards revenue sharing, right? Where their model is not lofty, it's not about look, this is the TAM, we capture this percentage of it, we earn how much, it's about real revenue fees, right? And I think this will usher in a new wave of DeFi. I'm excited to see where it goes. 2 more, sorry, bear with me, right? Thirdly, X2E, right? We saw P2E come up. Now we're seeing M2E, move to earn, come up, right? But I feel there's so much more potential in whatever X2E model, right? I'll give you an example. I saw this project that I won't name. They are trying to disrupt Google Maps, right? The problem with Google Maps is that they have a monopoly over geodata, right? And so they can charge, people who want that data a hefty sum. And because of that, I think there's some issues around that. And there's this project that is trying to decentralize that by using a map to earn model, right? And I won't share a lot on that because that will take quite a while, but what they do really well is they align incentives and needs between the stakeholders within this space really well. And I think that more people should look at this X2E model and see how they can align the incentives and needs of different stakeholders within different spaces. Because I think X2E is the next, is definitely going to come up in one way or another, and I think if you're at the forefront of that, that'll be great, right? Finally, infrastructure, right? I don't know if you know the FAT protocol thesis, right, where the internet stack, right? What is FAT? Where all the value is accrued is an application layer, right? The infrastructure layer is very thin, where value is not really accrued there. At the start of the crypto boom, right, it was the opposite. For the crypto stack, what is FAT, right, was the infrastructure layer, right? That's where Soluna Bex came up, right, because we didn't have a really good L1 to build on, right? And what was thin was the application layer. But you see, as the crypto side of things, came up and people started to speculate more, right? This was shift a bit. What the fatness moved to the application layer, a lot of value accrued there. Empty value, I would say, a lot of speculation there, right? And now because of the bear and the supposed winter, right, we are seeing some of that fatness, right, shift back to infrastructure. Because there are catalysts for that as well. The whole Cloudflare incident, the Infura incident, right? All the past Oracle exploits. We are realizing now more than ever that infrastructure is the most important. And in the winter, in a bear where price action is not as important, when noise is cut out, right? You see people really building there. And I'm excited for the next wave of infrastructure because I think that's the necessary foundation, right? For the next wave of value to be accrued to the application layer. This is an essential thing that we need. Yeah, so these are the main 4 things that personally I'm really interested in actually.
Yeah, thanks for sharing. We want to talk about tokenomics now, so I'll ask this to Adrian. Adrian, looking after the listing side at Binance. So the question to you is, how important is tokenomics? And how do Web3 startups basically decide what is the correct tokenomics, especially if they want to get listed on some of the top exchanges like Binance?
First of all, I think the experts in tokenomics might be beside me, right? Markus loves tokens, he just said, and then the VCs, they look at tokenomics a lot as well. And I'm sure Thielen has to think about that for her project. But on the listing side, it is also very important. When Stefano says like the way that he looks at things is dating, I think for listing it's almost like marriage, right? Because in VC you have a portfolio where you can bet and you have portfolio allocation that makes up for your losses. But when you list something, every token must succeed because the users are the ones that suffer if it doesn't, right? So as an exchange, it's slightly different. We have to take care of our users and bear that in mind. So we are especially selective on the projects that we list. I think that's the first thing to know. And that's why tokenomics is very important because the key thing is how you accrue value to the token, right? And why would people hold it versus dumping it or would the price drop? So that's why we need to study tokenomics, right? Which is the token and economics together. I think just very broadly, when you have a token, how do you look at the demand and supply that ensures that your token continues to get value over time, right? So on the demand side, right, really we look at the utility. Why would people use your token? If there is rewards, is it for governance? Do you have yield? Is it for staking? Is it for payments in the use cases? Right, so for different types of projects, there's different demand users, right? Infrastructure, tends to go very well with the token because it ties to the architecture. You need to secure the nodes and have consensus mechanisms. So you need to pay the validators. But when you go to the app layer, if you find very good tokenomics, then the value accrues, right? Because people want to use it more and they need it to play the game, for example, or they need it to access the web store and buy stuff, for example. So how do you drive demand of token, right? And then how do you make people want to hold it, right? And use it within your token economy. So we try to create those loops, right? As a project, you have to think about it very deeply to ensure that you can create these, loops. And on the supply side, it's really about token management, trying to find the right balance, right? Between the team, how much are they holding, whether they're sufficiently incentivized by the amount of holding, but yet not holding too much such that it becomes very centralized, right? And then how much goes to the ecosystem and the partners, and also to bootstrap growth, right? So who are the people that get token, to drive adoption, right? And perhaps you give tokens to vendors to bring in new users. So how does that balance out as well? And then finally, how much goes to investors? Because with investors, they always need a way to exit, right? And when they exit, that means that there's selling pressure. So staging of, the vesting and the unlocks are very important to ensure that, it doesn't come out all at one time. So those are things that are very important to look out for in tokenomics on the demand and supply side. But I think ultimately we are looking for projects that have a real use case for the token and able to drive long-term value accrual, right, within their token. I think one more thing to take note of is, we list utility tokens, which means there's an access to future services, right, or payment, a medium of exchange within the use of the project, right, versus security tokens, which is really a claim of financial assets like debt or equity. Yeah.
Thanks a lot. That was very insightful. Markus, this question is for you. DeFi, NFT, GameFi was actually the flavor up until the winter came. Do you think that post-winter it'll still be DeFi, NFT, GameFi, or there'll be something else that will make the market go from winter to the next bull run?
I mean, like a short answer, I think some of the lending protocols, I think they are probably history. I don't think people need those kind of to gain extra leverage. Because leverage you can get through other ways these days that are more through CeFi, exchanges, for example. No, but I think as was said earlier already, I think gamify, NFTs, of course, UXs and everything, and modernization, the financial system, and the inclusion that you said earlier. I think those things are going to be the big drivers. I mean, we know, for example, a lot of the traditional banks are all looking at it, all trying to gain access to it as well. A lot of those, there's a lot of stuff happening. I mean, it was earlier said the whole X to this, X to that. I think there's 100 business models that I probably can think about this afternoon, especially when the bars open at 2, for example. But I think there's so many things to do, encouraging other people, to kind of get educated. Having a great pool, a labor pool, and everything. I think it's really endless, and I think the decentralization really is really the key.
Can I add a little bit from our side? So we're not a Web 3.0 player, right? We are what we call a Web 2.0 to Web 3.0 enabler. We're the infrastructure layer, and that gives us a bit of a ringside view into what a lot of Web 2.0 is looking to do. So we're looking at this world from two perspectives, right? There are, so I'm talking about Web 2.0. I think that wave is coming, right, in a huge way. We divide them up into the fintechs and the non-fintechs. So there is this fintech space where you're looking at e-wealth managers, stockbrokers, payment processors. A large numbers of them are looking to enable digital asset workflows in their existing systems, and they're talking to us. So we're seeing, and that's an early adopter. These guys are getting really aggressive, especially in certain parts of the world. And then there are non-fintech players where gamify is definitely on top. Social media platforms of any kind, they are again early adopters. But beyond them, any Web 2.0 company that has, that holds any kind of wallet on behalf of the consumers are aggressively looking at it as well. Now these guys are still, I would say, 12 to 18 months away from actually realizing any of these dreams, but they are beginning to seriously have conversations as to what kind of ecosystem they want to create. How should digital assets sit within their current workflows, and how does it enhance what they are currently offering, and not just like, hey, I just want to enable Bitcoin or Ethereum in my workflow, no, or stablecoins for that matter. They're going beyond that. What does it mean to my consumers and experience? Is there a potential for me to add my own token in some kind of a platform format? And they're asking some real questions, right? It's not like token for the sake of token. How can it make things more efficient? So I think that is really coming, and that's what's most exciting for us, because that shows how, irrespective of what's happening on the price action side, building is happening, and it's not centralized to banks. It's not centralized to large institutions. This is really happening in a democratized manner in tons of companies of all sizes, SMEs. Massive number of SMEs are exploring it. They're joining our webinars, they're talking to us, and trying to figure out what kind of wallet systems, what kind of wallet solutions exist. And what's more is that they're beginning to ask smarter questions around what is the legal liability? What are the legal frameworks when I work? Like, for example, should I be using Wallet Connect? Should I be using MetaMask Institutional? Should I be using some other kind of wallet out there? Is it a self-custody wallet? Is it a third-party custody wallet? And how it impacts their users and legal liabilities on their own selves, right? So serious questions being asked by some really good players in this space, and that really excites me here.
So I'm going to take the word that you used called building, and then you want to add to it?
Just really quick, sorry.
Yeah,
Because
sure.
on the topic of NFTs, right? I just want to shout out something out there, right? I think we're really excited at the true utility of NFTs, right? We're moving beyond PFPs, right? Simple PFPs, and right now there's soulbound tokens, right? There's IOUs. There's also gateways to gated communities, right? So if any of you are building any of those, right? Please find a contract after that, because I think that the next wave of NFTs are coming, right? And especially soulbound tokens, this is something I personally love a lot, right? Many kinks to iron out, but I think that's something that should push the space forward actually. So yeah, just wanted to.
Yes, that's exactly my next question, right? So everyone is talking about building. It's time to build. So maybe I'll start from you itself, Stefano. What should be projects building? Like, should be building more on the NFT side, more on the DeFi side, more on the Web3 side, Metaverse? We've kind of not touched on that. Perhaps you may want to share.
Sure. Look at the back here. There are just games, Metaverse. So that's definitely trendy. It might be at a point where there is more supply than demand, but it's good because it gives us more choices. And also there is a trend that is quite interesting to analyze. If you recall, around 2020, the beginning of COVID, there were articles all over the place, Forbes, and they were saying that like gaming was a recession-proof industry. But actually the recession in gaming has started, the traditional gaming. There are a lot of companies that are laying off employees. There are media outlets that are shutting down entire esports coverage, and there is a large migration of users from Web2 game to Web3 games. Play to earn is huge in the Philippines. There is a lot of shift in that direction, and this month we have closed 2 investments in GameFi. It's very interesting for us. Anything linked to Metaverse. Also, definitely infrastructure. The opportunities are great. I wouldn't use the word blockchain anymore. I think it's obsolete to talk only about blockchain. It's distributed ledgers, whichever is the distributed ledger that is going to be used. There are many use cases. There is a massive use case that we missed, which was the COVID vaccination status on a blockchain. We didn't do that, but then there would be many other opportunities to put data and records on blockchain. So anything that is built on that layer, anything that facilitates the transition between Web2 and Web3, any creative use of NFT, perhaps proof of ownership. It could be insurance, it could be car ownership, renting, and this type of use. And yes, as I say, Metaverse and GameFi is very interesting for us at the moment. And just one last remark, because we are about at the end. If you want to add me on LinkedIn and connect, I'll be very happy to look at your project. Thank you for listening.
Very important question. The next one is for Adrian. Adrian, since Binance is more towards retail, correct me if I'm wrong, you are very, very particular in terms of what projects get listed on your exchange, right? So what are the key things or the key risks that retail investors should keep in mind before investing in any Web3 projects? Maybe you could share on that.
I think that's a very, very important question, right? Given where crypto has gone, and ultimately we're an exchange. There's a huge focus on the user side, but of course we're also building the institutional side of the business. In terms of key risks, I think the first thing to always say is in Web3 lingo there's DYOR. So do your own research and make sure that you really study this company. Some of these things that the panelists talked about, why the tokenomics, why it's a good project. right? If you can, look into the team, because that's very important. We passed the days of ICO where there were a lot of people that raised money and then ran away, but things can still happen now. So make sure you do a lot of research, right? I think that's the most critical part, and I'm going to area. I mean, nothing I say is also investment advice over here. Just to disclaim, and also probably a little bit more of my view rather than Binance's standpoint. But also, make sure that the amounts that you put in crypto is not everything that you have in your piggy bank, because you can see what's happened recently, right, to a few of these projects as well. It must be money that you're willing to, potentially you may lose it, right, if things go on. Those are the two key areas I just want to touch on, right? Do your own research and make sure that you have some risk management of your own when it comes to listing. Of course, on Binance side, we list only tokens that we are very confident of, right? Because it's essentially our stamp that say, hey, we've done the work, right? It's now an initial exchange offering rather than initial coin offering from an unvalidated vendor.
Thanks a lot. One last before we close, a word or a line from each of the panelists. What is the future of Web3? Maybe Stefano, we could start from you.
Yeah, I will just repeat myself. So.
For me, I think I'm going to zoom in on a sub-vertical, which is the Metaverse, right? Because everyone has an idea of the Metaverse, everyone has definitions of the Metaverse, right? And right now, the Metaverse is dominated by P2E, lately M2E, right? So I want to challenge all of us here, right? I feel like the Metaverse has a lot of potential, not just for games or earning, but for, and I'll say this, right, you may laugh at this, but for humankind in general, right? Because I believe the end state of Metaverse, right, whatever that is to you or you, right, is to remove the layers of abstraction between humans and computers. So what I mean by that is, let's say your father, okay, this sounds very crude, but if your grandmother, right, wants to use dashboards and Excel files and log files and things like that, it's really difficult, right? They cannot learn that really easily or quickly, or if at all, right? Pardon me if yours can, right? But many can't, right? To me, the end state of the Metaverse is one that removes that layer of abstraction. It makes certain things so intuitive that anyone and everyone can pick it up, can do it, right? Because that involves action, and that's the most baseline human state that we can understand. So to me, if more Metaverse projects, right, come up that do that, right, I'm very excited for that. And if you have ideas for that, please come check me out for that as well. Yeah, thanks.
So like Derek, I'll focus on one vertical. It's just otherwise too big to talk about, right? So I'll focus on capital markets. We're part of that. And to just carry on from where Adrian left. When we're looking at investing, right now, investments is such a core to capital markets. All of us, there are, if you just look back at what happens in the traditional capital markets, there are people who spend their time and they are professional traders and that's all that they do. But people like you and me who have day jobs do not necessarily have the right time or skill set to be able to, or even inclination to manage our portfolios ourselves. Now, and that's why we put our money with other professional asset managers or with mutual funds, etc., to kind of outsource that part of our lives. I'm quite excited to see how that aspect gets disintermediated with Web 2.0. So asset management is ripe for disintermediation. There are several projects that and I'm personally following and very excited about, where asset management is no longer one person sitting in one place, but it's democratized, where all of these different people can come together and you can decide who you want to put the money with, how you can follow their strategies. So there's a lot of exciting stuff happening on asset management. Just to take one small aspect of how Web 3.0 is going to disintermediate the entire capital markets, without putting too much onus on everyone else to know it in deep detail.
Yeah, I know we are very short on time here, so I'll just leave just the number. I read a report this morning, and that's the projection is between 2022 this year until 2030. Web3 is growing by 14x. So I think no matter what you do, the chances are quite high that you're going to be successful.
For me as well, I think Web3 right now is very limited to a very small subset of users, crypto native people. I think Web3 is really good if it's a very big community, because then everyone can benefit better. So really looking forward to more users coming over from Web 2 to Web 3, and from that perspective also, we are very happy to work with large Web 2 companies that want to have a Web 3 strategy and have a token, and then bring more users to benefit from this.
So with that, we end this panelist session. But on a positive note, all the panelists have agreed. We have more or less bottomed out, so we all can have a great party tonight. All right. Thank you very much.